In 1995, one trader destroyed one of the oldest banks in the world. Not an army, not a recession, not a cyber attack. One trader. His name was Leeson, and he worked for Barings Bank. Barings was not some small company nobody had heard of. It was a legendary British bank. It had been around since the 1700s. It had survived wars. It had survived market crashes. It had survived political chaos. And after more than 2 centuries of history, it collapsed almost overnight. The craziest part? Barings was not destroyed by some massive conspiracy. It was destroyed by hidden losses, bad oversight, and one trader chasing bigger and bigger bets. This is the story of Leeson, the trader who destroyed a 233-year-old bank. In the early 1990s, Barings sent Leeson to Singapore. His job was supposed to be simple. He was supposed to make low-risk trades between markets. Basically, if the same financial product was priced slightly differently in Singapore and Japan, he could buy in one place and sell in the other. The goal was not to gamble. The goal was to make small profits over and over. Safe, controlled, boring. At least that was the idea. But there was one massive problem. Leeson was not just trading. He also had control over the back office. That means he was involved in placing trades and also helping process or report those trades afterward. And that should never happen. Because in finance, the person taking the risk should not also be the person checking the risk. That is like letting a student take a test and then grade it themselves. It creates the perfect setup for hiding mistakes. And that is exactly what happened. At first, Leeson looked like a star. He was young, confident, aggressive. And he seemed to be making money. Barings executives loved the profits. They loved the story. They loved having a young trader in Singapore who looked like he understood the markets. But behind the scenes, the story was already cracking. Some trades started losing money, and instead of reporting the losses, Leeson hid them. He used a secret error account. The account became famous for one number. That account was supposed to be for small mistakes. But Leeson used it like a financial hiding place. Losses went in, questions stayed out. And once the first loss was hidden, the next one became easier to hide. That is how these disasters grow. They do not always start with someone planning to destroy everything. Sometimes they start with one bad trade, one mistake, one moment of panic, one thought, I can fix this before anyone finds out. But when the fix does not work, the lie gets bigger. And then the next lie has to cover the last one. That is what happened to Leeson. The losses did not disappear. They grew. So he kept betting. Bigger and bigger. Trying to win back what he had already lost. And for a while, Barings kept trusting him. Money kept being sent to Singapore. Executives kept seeing what they wanted to see. And from the outside, Leeson still looked successful. But the real position was becoming dangerous. He was making massive bets tied to the Japanese market. He needed the market to stay calm. He needed stability. He needed time. Then, in January 1995, disaster hit. A massive earthquake struck Kobe, Japan. The Japanese market moved violently, and Leeson's hidden trades started going against him. This was the moment where the problem became a disaster. Instead of stopping, Leeson doubled down. He kept trading. He kept trying to recover the losses. He kept believing one big move could save him. But it did not save him. It made everything worse. The losses exploded. By late February 1995, Barings finally realized the truth. The money was gone. The risk had been hidden. And the bank did not have enough capital to survive. Think about how insane that is. A bank that had existed for more than 200 years was brought down by losses hidden inside one account. Not because nobody had managers, not because nobody had paperwork, not because nobody had computers, but because the system trusted one person too much. And because the people above him did not understand the risk until it was too late. That is what makes the Barings collapse so terrifying. It was not just about one reckless trader. It was about a whole system failing around him. Managers failed, risk controls failed, auditors failed, senior executives failed, and the basic separation between trading and oversight failed. When the truth came out, Barings collapsed almost immediately. Nick Leeson fled Singapore. The bank tried to find a rescue, but the losses were too large. Confidence disappeared. And once confidence disappears in finance, time runs out fast. Barings was eventually sold for £1. £1. A bank that had survived centuries was sold for less than the price of a cup of coffee. That is what hidden risk can do. It can take something that looks powerful and reveal that it is actually fragile. Leeson was later arrested. He went to prison, and his name became famous around the world as one of the most infamous rogue traders in history. But the real lesson is not just that Nick Leeson made terrible trades. The deeper lesson is that Barings made it possible. A strong system should survive one person making mistakes. A strong system should catch risk early. A strong system should have limits, audits, and people asking hard questions. But Barings had something much weaker. It had trust. And trust is not a control system. That is the brutal lesson of this story. Trusting someone is not the same as verifying what they are doing. A trader can sound confident. A desk can appear profitable. A report can look fine. A manager can believe everything is under control. But if nobody is checking the truth can become very expensive. The scariest part is that Leeson did not need to fool the entire world. He only needed to fool the right people inside the bank. And once he did, the machine kept giving him more money, more time, more chances, more room to hide the damage. That is why financial disasters often look obvious only after they happen. After the collapse, everyone can point to the warning signs, the strange account, the missing supervision, the huge requests for funding, the trades nobody fully understood. But before the collapse, those warning signs were explained away. He is a star trader. He knows the market. The profits are real. Everything is fine. Until suddenly, it is not. Barings Bank had survived wars, crashes, and centuries of history. But it could not survive one trader with too much power and too little oversight. This was the trader who destroyed a 233-year-old bank. And if you want more stories about money, power, fraud, and disasters that almost changed history, subscribe.